Good day, traders. This is Crash Hunter over here. I'm going to speak a little bit about supply and demand in this video. So stay tuned with me, stay focused, and let's get into it. So basically, there's no SMC strategy, there's no ICT. It's pure price action, candlesticks closing, and basically uh, channels. I do like to trade in channels on the smaller frames all the way to the H4 frame. Okay. So basically here we have the gold, right? And basically we seen a breakthrough from this level over here. The market went down, and then here we see some bouncing, and the market went up again to this area. Then we have such rejection, right? So what I will do basically, I will mark my areas. So I put first line over here, another line in the middle, which like for me, I assume it as the 50 level. Why the 50? Because there's a probability of 50% chance that the market could break it immediately to the upside. And at the same time, there's probability of 50% chance that the market will break to the downside. On the other hand, we have this area over here. For me, it's so crucial. It will act as a supply in the future if the price, sorry, reach this area back again. So what I will do basically, I will just go here and I will put a rentage, right, at this level, okay? And at the same time, I would like to put a rentage over here because this area before was a supply, and the market shows some signs of rejection over here, right? He rejected after all. So, and I'm looking for an entry, right? I'm looking for an entry during these levels. Honestly, I could take a trade at this area, but sometimes like I would like to look for basically a break, right? Either to the upside and a retest, or a break to the downside and a retest, okay? So in this case, we have a breakthrough all the way through this line over here, and a rejection from this area, meaning that the buyers rejected the sell below this area over here, and the market pushed to the upside. I wouldn't like to take a trade with such candle. I would like to see a retest, right? So if I resume the candlesticks, you'll see that the market retested back, and I'll move this one like this. There's um, two areas basically where you can take the trade. The first one is basically immediately at this level over here, 2040 for example, at this candlesticks, right? So you can basically take the trade over here, right? Or you can make another trade at this low over here, because as I said, there is a rejection, a breakthrough, a retest. And what does that mean? It means that there will be more buy in the market and the price will continue pushing to the upside. It is just a retest respecting this previous broken area over here and this previous supply zone, right? So at the same time, you can also move this line over here, right? And you can make it as a level of demand once the market do such retest, and once the market uh, close you such candle. Actually, it's really amazing. This candle didn't close below over here, it did close above. Okay, it tested this area and it immediately rejected. So basically I will assume that, okay, my entry will be over here, for example. Okay, this is my entry, and I will be looking for maybe one to two or one to three with no issue. And you can see over here the market never actually um, like I bought, for example, at this candle low, and the market pushed to the upside, then he rejected back again. He never reached to my entry, okay, meaning that this level is a very strong demand instead of a supply, because been rejected, broken, retested, and this is a new level. This is your new level in the elemental chart. And you can see, after all, how the market reacted. In fact, I did publish a signal on our channel actually, and we did catch such huge move in the market, okay? Um, and you can see when I spoke about levels, about the supply and demand, it always exists and it always will be with you. You don't have to ignore it, okay? Always use channels. Like for example, okay, here you can see the market is creating, here is the lower low, and then here's a lower high. And basically here is another lower high for me, okay? This is a higher high, this is a higher high, and this is as well a higher high. Like this candle over here, it did touch this area, despite there's no closing, but in fact it did test above this area, okay? So meaning that the market is actually bullish, the buyers are in control. And basically, like you, like for me, like I can basically take such line and I can plug it like this, and here, because this area before was acting the 50 level, okay? Here it did act the same, and here it did act the same, okay? As supply, let's say, okay? Supply, supply, supply. And at the same time, if I remove this line and if I plug it this way, okay? And let me just call it a golden or a yellow one. You can see here it did act a little bit as a buy, and then as a buy, and the market pushed to the upside, okay? So basically, this is the level of supply, this is another level of supply. You don't want to sell here, and you don't want to buy over here, okay? Since you have such channel, okay? The most important thing actually is that you have to wait for some candles form. Like we speak about this structure over here, okay? This is the main supply area, okay? And then the market rejected this level and he went all the way here. And then we start to hover uh, like in this area. And honestly speaking, I was looking, for example, from a buy from this level all the way to this level, but the market didn't do it this way. How the market moved? The market moved with another narrower channel, which is this one. And you can see how the market broke it after all, okay? Meaning that a lot of people bought over here and then the market retraced back to hit their stops, right? Because if you buy over here, where your stop will be either below this area or over here. It all depends, honestly speaking. Like I'm sure for some people, like if you take a very big lot, you know, your stop will be, I'm sure, at these levels, okay, or maybe even higher. So you can see here how the market pushed all the way to the upside, respecting this key level on the structure. And this is also a daily level, and the weekly level is very strong. And then the market rejected again back. So going back in the structure again, and basically we still have these levels in action, right? And what I mean basically is that this area is a demand, the market pushed through it, the market retraced back again. This area previously was a lower high. Where is your next lower high? Should be over here. Why? I'll explain why. We have basically a breakthrough from this area, right? This previously it was a resistance, it was a supply, market rejected, the market basically bounce on the 50 level, which I have from this line, as I mentioned for you before. And then we have this breakthrough, a rejection from this supply zone, and basically the market respected this area heavily, okay? So this is like another indication, okay, like once you see the price over here, right, you have to understand, okay, we have a broken level of resistance, a broken level of supply, and the market went all the way up. At the same time, the market created some lower highs and higher highs, right? So we are still in a bullish market. Here, you don't want to take a trade immediately with such candle. It's so stupid, honestly, and it's so risky. What you can do is a push, a retest, a full continuation. And in fact, it did, but you can see, like for me, I would assume such levels are weak and are actually risky, kind of, to take a trade, especially if we look on the left-hand side, it is basically in a supply zone. And once I see such move and then a retest, okay, what I will do, I will take another line, right? And I would say, okay, we have this level, first of all, is basically a very strong key level, okay? And then I will have this line over here as a very strong level as well, from this area, from this area, and then from this area. And guess what? I did publish a signal on it, and I did take a trade on it, and I did make some profits, okay? The market is still actually moving within this channel of supply and of demand. And you can see the candlesticks over here. It did test this low, right? But it didn't go up below it. It did test this lower high zone, and then it immediately rejected. And you can see the market, after all, pushed to the upside, creating another higher high. If we speak about this move, okay, this is another higher high, and we have the candlesticks are moving right now at this current data that we have. They are moving with this narrow channel, okay. Here there was a massive volume and the market actually respected this area, then he rejected, and then basically we start to hover between these 1, 2, and 3 lines, okay. Lower highs, higher highs, and that's how the market is moving. You don't want to take a trade at these levels, okay. These levels, the 50 level, the level which is between the supply and the demand, is very risky, is very tricky, and it's so exhausting. Sometimes the market would immediately put you in profit, especially if you identified some key levels in the market, like for example the structure, right, of the market. Like if you understand there's like lower highs, higher highs, there's volume in the market, a decent candlesticks closing, you check the daily frame, the H4 frame, it's all bullish, or it's all maybe bearish, you can take the trade, right? And the market would go immediately with your side if you take the trade from the 50 level. And you can see over here what happened, basically cup, then a full rejection, right? And here's the tricky part. All the stop loss, which a lot of buyers did bought over here, all their stops are basically below this level. And basically it got hit and it made a lot of room for liquidity, right? And then basically the price moved to the upside heavily, okay? On the other hand, if you really think about it, like we're still in this channel and this level is still active, it's still in action, right? And the market push, and then boom, here's your rejection from the 50 level over here, and you can see how the market is respecting it. I didn't put this just now. I actually have all of this structure since the past week or so, right? And I was trading on it, okay. And you can see over here this level is basically been pushed because you have the whole biases is saying that the gold is bullish, right? And you take the trade on it, and yeah, it pushed immediately to the upside, and guess what? It tested this level, rejected back again, then it retested back again this level. I'm speaking about this line, right? You can see how these lines are so powerful. Some people actually wouldn't agree, some people would think it's so stupid, but they are really working, in this market. They are really working, and they are I don't know, it's just part of the candlesticks. I think these levels without, I think these candlesticks, they won't react good if there is no levels like this, okay? I mean, horizontal and vertical levels, they will be just, I don't know, dead basically, okay? Um, the elemental chart would be so messy, so choppy, okay? So keep it in your head. Yes, banks do use these levels, okay? Hedge funds, they do use these levels, they do understand these levels, and as well as the retail traders, okay? So once you see this rejection over here, for me, I would like to plug another line over here. So basically we are out of this range, and then the market went up, and then he rejected. Me personally, I didn't take any trade here, unfortunately, but I seen that the market break through immediately, okay? And then he closed the candle above. Okay, here I understand, okay, I plug this line, I plug the 50 level line, and I plug the main supply line. So this is the demand, this is the supply, this is the 50 level. And I would like to look for a buy, for example. So I can take a buy over here, right? Um, or maybe over here with this candle, I would like to target these highs, the 80s, for example, or maybe this one over here. But it would be risky. Why? Because if you look on the left-hand side, you are basically in a very strong supply zone on all big frames, H4, the daily, and the H1. And I will show you right now. So for example, this is the H4 frame, and you can see basically here was the price, right? And this is a strong level of supply, and this is also, we can apply it on the monthly and on the weekly, right? You can see this level of supply is kind of strong. Okay, let's go back to our structure. Where is it? Okay. So basically, you can see over here how the market is reacting, right? He pushed to the downside and then he moved to the upside. And I still have this fucking 50. Okay, this fucking 50 is still working over here, you know, despite there's interference between two channels. This is a sideways channel, I would call it, from a strong rejection and then a retest. And guess what, guys? I published a signal actually on it over here. 2078 something, no, 2075 something. I took the trade and my stop was over here. I would like, at that time I was thinking to put my stop here, but I was thinking, okay, maybe the market could reach it, and then he dropped, so let me put my stop very very short, very tight. But I got kicked. Some people actually didn't in my group, so that's the most important part. I got kicked, and I guess it's all about my risks, right? I didn't expand my risk at least to 82 maybe, or maybe 85, something like this, right? So here the market basically start to have a different characteristics in terms of the price action, in terms of the candle closing, in terms of the movement of the price. We went to the upside, and then basically we rejected all the way back to this level. And here you say, okay, well, this level is the basically is the 50, sorry, is the demand. We have another lower high, right, been formed over here. So okay, maybe you are right. And guess what? I got kicked with it. I took like this mistake, you know. I made my mistake because like I took the trade here, the market went up, I was happy. Then boom, I got this, right? Here is where you have to take the trade. Why? Because this is the main supply. The market rejected and the market retested, okay? And then here you can take the trade. And you can see, boom, full breakthrough all the way to this demand. The market retested again, same level over here from this lines, and then we rejected back. So I don't want to make it so complex for you. And this is the gold, and you can see how the price is moving between this sideways channel that I do have. Right now, we are basically out from this main channel that we do have it from the previous times, right? So from 21st of December until 29th of December, the market broke this channel. Okay, now we are in a different channel, right? And you can see how the market is moving in a sideway to the downside. Okay, basically the bears are in control, but it's all going back to the fundamentals as well. News, it will impact the gold heavily. Speaking about the gold specifically, it's highly impacted by geopolitics, by the US dollar, the DXY, and so on. So I don't know if I make this video for you really clear. Maybe it's not, maybe it's confusing, maybe the way that I explain is not so good, but the main thing is that all what you need is to identify 3 levels, 1, 2, 3, within a certain time frame. The H4, the H1, or maybe the M30. It really doesn't matter. Like if I go to the H4 right now, okay, and if I go, for example, over here, right, and it's same principle. Like we have this rejection, another rejection, a retest, right? What I will do, I'll take this line and I will put it this way. I will take another line from basically from this candle low and I will put it this way and I will certainly modify it. Okay, I will modify it because I have current data. I have this low example. Like this is what I do have right now, right? In the chart. I will modify it this way. Okay, so this is my supply zone. This is my demand zone. And this is my 50 level. Okay, why? Because here the market was struggling. Here the market was struggling. Okay, this is my 50 level. Either the price can break through to the upside or to the downside. And you can see like higher highs, lower highs, right? And if you want to buy, you could buy over here. On the other hand, guys, like if you really think about this area over here, the market went up and then he rejected and then boom, he broke through this supply zone. But by another mean, like if you understand this point, what does it mean? It means that the supply became the demand and the demand in the market, yeah, the supply, in this case, the supply became a demand, right? And so on. But in the bear market, it will be the opposite. The demand will be a supply, okay? And I did show you that in the previous M30 analysis on 29th of December, right? How the market rejected, he started to move in a sideways channel on the M30 frame. And basically the market broke through the main level, which we had from here, right? He broke through this level and then he rejected back. So basically this demand level over here, he became a supply. Okay, going back to this structure again, let me just be so quick with it. And you can see this is a lower high, the market pushed, retested, and I said for you that supply became a demand. And basically for me, I think like when I see such correction, I also be happy. Why? Because always the supply creates its own demand in the market. Okay, keep it as a rule. Okay, if you see such strong supply, be happy for it. You know, if you have an uptrend and you see such strong supply and the market push to the downside, then he start to bounce, it's totally normal. Meaning that okay, this supply, it will create a future strong demand in the move, right? Within this channel, for example. And you can see like I have same exact line. Okay, same exact line. The market pushed through, he retested back this level of supply, right? Of broken supply, which became a demand. Then he moved to the upside. Like if you tell me like, okay, do you like to trade from such areas? I would say no, but I would definitely keep an eye on it. Okay, especially if I have this move and then like a reaction from a lower high. Sorry, yeah, a reaction from such level, and then the market moved to the upside, retested, and I would like to keep my eye over here on the market. But sometimes I wouldn't like to trade because it's so risky at any given point the market can go back maybe here or here, and he would push again to the upside. Making my entry level is kind of bad, frustrating. So why should I take such a risk? If the market can offer me, if the market is moving with such range, with such price action, with such candles, I could look for a perfect entry, right? Example, as over here, or maybe over here, over here. Why not? And you can see, taking this channel on the H4 frame, you can see how here it moved, and this level became basically a demand area, and this level became a supply. Okay, let's say over here. Okay, this is your supply. But what happened? The market, boom, break it. Okay, he do another higher high, and then he start to bounce. Basically, he start to create some key level, and then boom, he broke through it all the way back to this line of main supply. And you can see it also rejected. But what happened? He start to bounce back again. I know a lot of like some of you will say, okay, why, like here, like if you took a sell over here, the market move your way, okay, but maybe your TP is here, maybe your TP, I don't know, you are looking to break through this structure because the market moved really high, right? I don't blame you. I really don't blame you, but this is how the market moves sometimes, okay? It's not fair, right? The market is not fair for everyone. But like in case you see such movement, and like in case you understand, okay, every time the market push to the upside, he reject a little bit, he create a key level, and then he move to the upside. Why don't you just buy, right? Why don't you take this opportunity as a buy? And believe me, that day I took a trade over here, and I did exit at, I think, 61, something like this, 61 or 59. I took a sell. First of all, I took a sell at this area, and then the market moved. Then boom, I have this rejection. I immediately closed my trades, and I enter 4 buys. Okay, and I took some profits, and I did recover this loss I took from this area. You see, it's very tricky. It's tricky business. And basically, yeah, we have this crazy move. This is due to the geopolitics. The market crossed this level over here. You can see the wick is so fucking big. Okay, and then boom, we have this breakthrough. Then the market assumed this level as strong supply, and then he moved to the downside. I don't know if I explain it so well for you guys, but like if we go again, gold, same story. We have this area, right? And then we are noticing that the market is moving in the downside channel, right? And basically, at that moment, I see that the market creating such key level. Okay, here is where I take the trade. Here where I go aggressive in the market. My stop is very short. So I mark my first level of supply, my first level of demand, and the 50 level. And how it works, it's so simple. You are looking for short. You don't want to look for longs over here, because on the bigger frame, it is drawing, basically, it's selling. Why should you look for a buy? It's so risky. You can make profit on it. I agree, because you are watching that there is a corrections, right? The market is moving, creating lower lows, lower highs, right? Lower high, and another lower high, right? And basically, you are looking for this, for example, a trade to be from this area over here, and basically your stop just a little bit above 1 to 1 or 1 to 2, something like this. It's not an issue, okay? And you can see you can take a trade on this candle, or maybe from this movement. Once you see the price reach this area or this area, you can execute yourself, right? And you have the stop. Most important thing is that you have a stop loss. If you don't have a stop loss, you will get tricked, my friend, okay? Because for me, I got tricked many, many, many times in the market, and it's a really big life-changing lesson, I guess. Your stop loss is basically is like your seatbelt when you drive, okay? You don't have a seatbelt, you have, I don't know, a sideway accident, you'll just get wrecked, okay? You'll die, basically, if it's really strong accident, meaning that if the market, boom, pushed immediately, like with very strong price action, 64, 70, I don't know, and you didn't close this trade, or maybe you was away from this trade, you will have a huge, huge loss, especially if, for example, your lot size is not suitable for your account size. Okay, so you can see over here, same principle, and this level start to act as a 50. Me personally, I would like to take a trade on these areas, despite the fact, okay, you can take a trade on the 50 over here, or maybe over here, or maybe over here you have a price action, you start to have weak candles, uh, like there's some other like things you have to look through, and you have to make the decision, right? And you can see over here the market, boom, respected this level, and then he start to bounce, and then we have what, we have a breakthrough, a rejection, and then a breakthrough again, by means this area over here, it will all became a demand. Our resistance is broken, our channel, it is done. I don't need it, I don't need it, I don't need it. Okay, now basically I have different price action, I have different channel that the price is respecting. Okay, let me just wait a second. So we have this beautiful line. Okay, this line doesn't align over here. Okay, both lines are not aligning, except this one over here, and except we have this breakthrough. So the market moved, and then he retested this area one more time, and this, as I said, this level became strong demand, and then the market moved to the upside. If I see the market over here, in this case, I would like to put this area like this, and then I put my level of supply like this, right? And I put the 50 level like this, basically. Okay, I'll make this one white, and I will make this one white as well. And you can see the market respected this area, and then he respected again, and then he pushed to the upside, crossing the 50 level, and then he reached this demand area over here, this supply area over here, sorry. And boom, we have a different channel, we have different story, different rhythm, different dance in the market. Okay, you can see we have a sideway channel, a correction as well, and then boom. So it's like, it is basically like this. Like, it is very simple, guys, really. If you see the market is moving with a simple channel, a clear channel, right, you can take a trade on it. This one maybe wasn't so clear, right, especially because especially over here, because it was a breakthrough, okay, from this area over here. But you will see this maybe on the smaller frames, on the M30, or maybe on the H1. You will find this channel, I'm sure, and you can trade on it, basically. On the other hand, like here, what we do have, like the market moved, this is our demand line, right? And the market broke it to the downside heavily. He retested a little bit. This level became a supply. Okay, you don't want to take trade over here. Okay, don't take it. You don't want to buy over here, maybe, or you don't want to sell. You want to stay cash. You are just looking at the market. That's amazing. You look for this move, and then the market retested back again, and you see another rejection. Here you have to make a decision. If you think this level is a strong supply, if it's aligned to your supply and demand strategy, your risk reward, I don't know, risk exposure, you can take such trade, right? And you can sell. And for sure, if you understand how these lines are working, right? Basically, you'll understand where's your TP, and where's your stop loss. And here we have a different story again. Okay guys, this is it for this video. I don't want to make it very complicated. It's just basically lines, supply, demand. For me personally, I've been using this strategy for a lot of time. It's working perfectly, okay? And it's not complicated. I don't make things complicated in this market at all. Like I sit, I open the chart, I look to the daily frame a little bit, then I go to the H4, to the H1, and to the M30, and I just look for supply, demand zones, and I watch. That's all. I watch the market for a little bit. I understand where is the buy areas, where is the sell areas, and where is the price section. That's it.